So you and I, we were talking on Revolution Radio about some of the things that have happened in crypto lately. In particular, Kraken got cracked down on, basically saying, hey, no more staking. Coinbase has already pushed back, saying that they'll go to court if they have to about that. But nonetheless, the lack of staking, meaning, leaving your coins on an exchange to earn more um, upside, or, payments and so forth, that has cryptos upside down, and it also has Coinbase down better than 5%.
Yeah, that's right. And of course, the Kraken settlement, John, that case was brought by the SEC not about their staking activities, but about the sale of an unregistered security through the Kraken token. What the SEC did, which has become part of their standard operating crypto procedure lately, as they regulate through enforcement rather than the issuance of guidance, which is greatly frustrating to everyone in the crypto business, is to say, we got you for this, like the speeding ticket. The cop pulls you over and says, you were speeding, but you've also got a busted taillight. Well, this was the busted taillight in Kraken's chassis. And it was a way for the SEC to send a message, a clear message across the crypto industry that staking is not something that the SEC likes. And, John, we've talked about this for the better part of a year and a half, that we thought that staking, because it looks a little bit too much like banking activity, a certificate of deposit, that was going to be one of the first that the regulators were going to get around to cracking down on. And sure enough, it's playing out, and crypto names like Coinbase paying the price.
Yep, absolutely. And one of the issues here too, Mark, was Pete and I think perhaps you and I earlier in the year, because this stock had doubled, folks. It went from $37 to over $81 a share year to date. And now it has sold all the way back down into the 50s. I'm not going to say we were soothsayers, but we did have a lot of put activity in the name. And my gosh, we said, hey, if you get a 100% return on a crypto, even though crypto really just kind of stabilized and moved from beginning of the year, let's say 18,000 or whatever, Mark, to 24,000, and now it's pushed back down. That doesn't justify a doubling of Coinbase, in my opinion. And we were saying, take the money and run. If you had some of that, time to cash that check.
There's no doubt Coinbase benefited from a flight to quality that happened after the FTX debacle unfolded right around Thanksgiving of last year and into the holidays. But that was not to be forever, particularly against the backdrop of looming increased enforcement by the SEC and other agencies on the back of SBF's spectacular rise and fall.